Hey traders, the question that many people ask is whether the technical analysis works. How does it really work? Let's break down the answer into several elements. First of all, technical analysis is not a strategy but a set of tools that you can use to describe something. The price chart itself is a form of technical analysis, and that alone says a lot. We have a clean chart, the same for me as it is for you. Looking at it, we can see completely different things. In trading is about whether the price will rise or fall. So many not agree on that, and that's understandable. One of us will be right because, for example, the price moves up, but not because you draw a line or added an indicator. It happens when the majority of market participants in that instrument decide so, or more precisely, the majority of capital. Some people will look at the RSI indicator, others at trend lines, and others at price action. Therefore, the fact that the price increased in a result of the decisions of many people around the world. The next time the situation may be similar, but the opposite may happen and the price may drop. But is it reasonable to say whether the technical analysis worked or didn't work? After all, it's not a strategy. It's a bit like in life. We, in theory, have a law, but why are there cartels? Because someone has a different opinion and interprets the regulation differently, even though they are right in the same way for both sides. Does the law work or not? It depends on who you ask. And the same applies to technical analysis. For me, technical analysis is a tool, and in my approach, I connect it with statistics and setups, which are recurring patterns that I have verified because I have studied market patterns over 100 times, even more. So, do I need to be 100% correct to make money in the market? Absolutely not. I must mention the legendary fundamental analysis as well. Sometimes someone writes to me or I read somewhere that Warren Buffett used fundamental analysis and is a top trader, top investor. I disagree with this theory because he uses what is most important. He uses capital, money, cash. If he wants a company's stock's price to rise, he has the means to make it happen. Just like Soros attacked the British pound's exchange rate, he had the resources to do it. And did he make money from it? Oh, I forget to mention subscription. If you like what I'm doing, leave a like and a subscribe channel. It will help me grow the channel, okay? Thanks for that. And let's back to the Soros. Yes, Soros made $1 billion from these moves, from his acting against British pound. And again, fundamental analysis is about interpreting data, events, and drawing conclusion from it. Can we have different conclusions when we looking at the same information? Of course we can, because each of us will assess these elements based on our current knowledge, beliefs, and what we imagine about a particular situation. After 16 years in the market, I know one thing. Tools can help us, but they can also hinder the decision-making process. If elements of technical analysis are getting in the way of your decision making, remove them from your process. If fundamental analysis is causing decision paralysis because you don't know what to do with that knowledge, don't use it. There are no shortcuts. You need time to develop your decision making process. Give yourself room to make mistakes, to learn, but know them, know the lessons, and improve every day. Time will pass anyway, and in a few months you can make incredible progress, or you can waste that time. It's all in your hands. And remember, all-in traders are not about the risk, but about the process. So focus on it and keep trading, folks.